Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is October 23rd, 2024, and we're diving into the third quarter earnings report of NVR, one of the nation's largest home building and mortgage banking companies. Joining us is John, Senior Analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. NVR has just released their Q3 2024 earnings, and there's a lot to unpack, from revenue growth to changes in their home building and mortgage banking segments.
Revenue and profitability overview. Let's start with the top line. NVR reported a net income of $429.3 million for the third quarter, which is a slight decrease of 1% compared to last year. However, their diluted earnings per share increased by 4% to 130.50 cents. John, can you shed some light on this?
Absolutely. While the net income saw a minor decline, the increase in EPS is attributed to share buybacks, which reduced the number of shares outstanding. NVR's consolidated revenues grew by 6% to $2.73 billion, driven by strong performance in their home building segment. However, the gross profit margin decreased to 23.4% due to higher lot costs and closing cost assistance.
Home building segment performance. Moving on to the home building segment, NVR saw a 19% increase in new orders. The average sales price of new orders was $450,700, a slight decrease from last year. What does this indicate about their market strategy?
The increase in new orders is a positive sign, showing strong demand. The slight decrease in average sales price suggests NVR is focusing on volume and possibly targeting more affordable segments. Their backlog of homes sold but not settled increased by 9% in units, indicating a healthy pipeline. Home building revenues rose by 7% to $2.68 billion, reflecting these strategic moves.
Mortgage banking and financial metrics. Let's discuss the mortgage banking segment. NVR's mortgage closed loan production increased by 2% to $1.66 billion, but income before tax from this segment decreased by 9%. What are the factors at play here?
The decline in mortgage banking income is primarily due to reduced secondary marketing gains on sales of loans. Despite the increase in loan production, the competitive pressure in the mortgage market has impacted profitability. Additionally, the effective tax rate increased to 20.3%, affecting overall net income.
Strategic initiatives and future outlook. Looking ahead, NVR has been active in share repurchases, with $357.5 million spent in Q3. Their backlog value stands at $5.32 billion. How do these factors position NVR for the future?
NVR's share buyback program is a strong signal of confidence in their financial health and future prospects. The robust backlog value supports their revenue pipeline. However, they face forward-looking risks such as economic conditions and interest rate changes, which could impact their operations. Their presence in 36 metropolitan areas provides a diversified market base to mitigate some of these risks.
Key takeaways. In summary, NVR's Q3 2024 performance shows solid revenue growth and strategic positioning despite some profitability pressures. Their focus on expanding new orders and maintaining a strong backlog bodes well for future growth. John, any final thoughts on NVR as an investment?
NVR remains a strong player in the home building sector with a solid financial foundation. Investors should watch for how they navigate economic challenges and leverage their strategic initiatives. Overall, they present a balanced risk-reward profile.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on NVR's performance in the comments below.